Good morning. Welcome to the early morning call on IGTV, broadcasting from the heart of London. Well, later on in the programme, I'll be joined by Richard Hunter, Head of Research at Wilson King Investment Management. And we're here from our Melbourne studios for the Asian Market Wrap. But before all of that, let's have a look at the FTSE and see how it's faring this morning. And it's looking pretty dismal, actually, this Friday. And that's after enduring its worst week since before Donald Trump. Before his victory, before the US election win. Traders will eagerly be awaiting his arrival, though today, that's of course at the White House. It's a big day. Although, though, it has to be said the pound received a boost from Theresa May's speech this week in Davos. That was at the World Economic Forum. It was aimed at EU leaders and, of course, the business community as well. She made it adamantly clear Britain is open for business. Well, let's have a look at the European numbers then, which, as you can see, were pretty mixed. This is what's happening now, though, and it's looking very flat. It's obviously early days. That's after the ECB kept rates and its asset buying plan unchanged as expected. The ECB chief, Mario Draghi, said it's too early to assess the impact of Brexit and that the latest Eurozone inflation was not enough to move just yet. And let's have a look at Asia then. And as you can see there, it was actually, well, it was quite a good day actually. A lot of that was because of China. Chinese stock, they gained on stronger than expected economic growth at the end of 2016. But overall, China's growth came in at 6.8% last quarter from a year earlier. That's after 3 straight increases of 6.7%. We're going to have more on that a little bit later on. But before that, let's have a look at the close on Wall Street. As you can see there, it was pretty dire actually. It was a day in the red. US equities, they closed lower on Thursday, with real estate falling around 1%. Again, everyone is just awaiting this inauguration. There's simply a lot of policy uncertainty right now. No one quite knows what Trump is going to do at any moment in time. Meanwhile, the US dollar spiked against a basket of currencies on the back of strong US economic data. It's very early trade though in the US, but as you can see just here, it's looking well, pretty flat again. And as I say, it's the day when the world's richest country welcomes a new president. Well, let's get over to Melbourne right now. We've got our analyst right there who's going to take us through what the Asian markets did.
In the Asian session today, the market's quite mixed. We saw China GDP numbers come through at 6.8% year on year. Q4 also at 6.8%, so quite a good result. It's the first expansion in 2 years. 2016 power output was reported up 4.5% at 532 billion kilowatt hours. That we saw the crude processing up 3.7%. Retail sales in the area also rose 10.9% year on year. So during the session, the Australian dollar remained steady at 75.86, underneath the key level of 76 cents. During our session, Yellen also gave a speech at the time, said asset valuations were not unusual in this rate cycle and the economy was moving at a reasonable pace. US 10-year yields remained steady at 2.44, just below the high of 2.46, the high of 2017. So most of Asia was flat to mixed. We saw the Nikkei up 20 points, 0.1%. The Hang Seng down 154 points, minus 0.65%. The ASX at this point is down 32 points and quite mixed. The best sector today, healthcare, with a CSL upgrade, and Mayne Pharma up 3.2%. Mayne Pharma has a large exposure in the US. So the talk around the markets is that with Trump's inauguration tonight, there's a little bit of nervousness around, and that he may start a trade war with China. That remains to be seen, but a lot of commentary around China's currency manipulation. So copper today remains steady at 2.61, $2.61, up 0.33%. Iron ore also steady at around $80 a tonne. Iron ore futures. So gold, 1,207, and starting to consolidate above the $1,200 level. US dollar yen also remains at 114.63, with the euro US dollar at 106.8. So quite a steady session today.
OK, well, right now we've got Richard Hunter here, Head of Research at Wilson King Investment Management. Hello to you, Richard. Good morning.
Morning.
So let's just follow on from that, if we can, from the Asian session, because it was a good number for China. We were expecting a good number. They're always good, right? But it's good for the global community. It's good for the global markets.
Yes, it is. And even though there tends to be scepticism from time to time on the reliability of the Chinese numbers, certainly some of the UK companies who do a lot of business in China tend to imply that maybe the GDP growth rate is nearer 4%, for example. Although, you know, that's still fairly strong if you look at the rest of the Western markets at the moment. But I think the main thing with China, it's always worth pointing out, although in the West we tend to look at things on a minute-by-minute basis, China are in it for the long term. They're looking at it on a decade-by-decade basis. Obviously, the country's changing, consumerism's rising, possible question marks over their property real estate market at the moment. But yes, without question, the demand we've been seeing towards the latter part of 2016, helping mining shares in London, for example, and yes, definitely healthy for the global economy.
Yeah. Let's talk about the FTSE then and the markets, the domestic markets then, because obviously it's been a very disappointing week, hasn't it? What do you think is feeding into this? Do you think that it is largely uncertainty about Trump and also uncertainty about Brexit, obviously, as well? We had Theresa May speaking on Tuesday.
Yeah, they're certainly there in the background. I mean, in terms of this week's move, it's been largely a factor of sterling's strength in much the same way as last year's rally post-Brexit was on the back of sterling's weakness. So that's been the main factor. But interestingly, if you strip out the sterling effect, the FTSE, despite having been hitting record highs, is basically unchanged. And those big two issues of the actual ramifications of Brexit and the actual ramifications of Trump clearly can't be ignored.
I think as well this week, obviously I mentioned it's been the Davos World Economic Forum. There's been a real conflict of, we'll be fine, we're going to actually be stronger and business is going to boom. But actually a lot of people there, a lot of people in the business community have been sending out their warnings. And it is quite worrying when you do consider all of these banks moving out of the UK potentially.
Yeah, I mean, in terms of Davos last year, for example, one of the words that was missed was populism, which then became the word of the year in 2016. So how much that actually adds, the whole economic forum is a matter for debate. But yeah, certainly in terms of what we have at least had this week, partly because of the Theresa May's speech at Davos, but also her speech earlier in the week as well, we do seem to be getting a better feel for the UK standpoint, and of course the more uncertainty we can remove, the better.
UK retail sales are out at 9:30 this morning and actually expected to be very healthy indeed, actually. We can see the figures just there. So year on year, 7.2%, that's not bad at all. Now a lot of this is being put down to the fact that people are making these last minute ditches to the shops, and also where Christmas fell helped as well, because they had the Saturday to do their shopping.
Yeah, I mean, with the exception of Next, which is often seen as the bellwether in that sector, it's been a pretty good reporting season so far. There have been a lot of quite pleasant surprises, but you're absolutely right. The reason for that is the resilience of the UK consumer, who is either making a last-minute purchase or simply digging their heels on the basis that the economy generally has held up much better than expected since June.
Well, maybe they're just generous.
They are, yeah.
Filling up the trolley with all their presents. What else is going to drive the market today? We mentioned the Trump factor as well, because there's so much uncertainty right now. We had market euphoria up until now, and now we're beginning to see that falter a little bit. Why?
Yeah, sometimes it's better to travel than to arrive, and that initial euphoria, I think there's now, particularly in terms of the financial stocks, for example, where there's a possibility of lighter touch regulation coming through, although again we've yet to hear that officially. I think there's now an element of this is now happening, this is real.
This is real.
And even though banks, lighter regulation, you know, infrastructure spending, general tax cuts, they may well be coming through, in which case a lot of that optimism would have been justified, but we've still yet to hear it from the horse's mouth. So then, quite apart from the inauguration today, we'll start to get a feel, I suspect, very quickly for what his actual policies are going to be.
Okay, more market analysis with you in just one moment. I'm just going to go through some of the earnings that we've had, because American Express, they actually raised their 2017 EPS guidance 7 hours ago. Express, as I say, American Express, they reported quarterly earnings per share that fell short of analyst expectations on Thursday. The credit card issuer posted fourth quarter adjusted earnings per share of 91 cents on revenue of $8.02 billion. Well, analysts projected American Express to report earnings of 98 cents a share on $7.95 billion in revenue. That was according to Thomson Reuters just there. So let's move on and talk about some other earnings as well, because we've also got IBM, which actually beat estimates. Just a touch though, revenue for the quarter came in at $21.77 billion, up from expectations of $21.6 billion. Because of the strong quarterly earnings, IBM also beat full year estimates as well, posting 13.59 in earnings per share. Although it has to be said, the share price slumped in response. Now, this could be a profit-taking scenario, or just that it's not quite enough for what people wanted. Obviously, they have been dropping in 19 consecutive quarters, so revenue was still down. I just want to pick up on this one, Richard, if we can, because we've had a lot of US banks financials reporting. It's been a real mixed bag, and we mentioned the Trump euphoria. They've escalated because of this Trump trade. Do you think that that's going to fall off now as well? Because, as I say, the fourth quarter almost completely put up the whole of the year for these US financials.
Yes, that's right. And there's no question that the very election of Trump has unleashed some animal spirits in the States. That remains, of course, to see whether it filters through into actual numbers as we go through 2017. But I think one of the things we were saying at the end of 2016 is that we expected a fairly strong fourth quarter from US corporations generally, which we've pretty much had. But by the same token, for markets to continue their progress, those companies very much have to keep to their side of the bargain and keep those earnings going throughout this year.
Okay, I'm just going to get up a chart so that people can have just a look at this while we're having a chat. Right, let's move on and talk about General Electric, because it's coming up this afternoon before the opening of the US markets. General Electric is set to report earnings for the fourth quarter. Analysts expect earnings per share of 46 cents on revenue of $34.9 billion. Well, also reporting this afternoon, oilfield service company Schlumberger. Let's talk about oil then, because obviously I can say it, don't worry, Schlumberger is doing better because oil is faring better, and it's all to do with providing the machinery for these fracking companies. In terms of the oil industry, we've actually got a big meeting coming up this weekend on the 22nd, and I think it's to tally up if everyone is doing what they said they were going to do in terms of cutting production. Do you think that they are? Because we're always very on edge when it comes to OPEC.
Yes, we are, and we should find out, as you say, a lot more this weekend. There's a bit of unpicking to do here, because some of that rundown in production was due anyway. Obviously, you've got different parts of the world being under different climates at the moment, so potentially there's less demand in certain areas anyway, so production would be reduced. But yes, you're absolutely right in terms of both OPEC and non-OPEC countries such as Russia, who had promised to cut production. The recent spike in the oil price is very much predicated on what was previously announced, although OPEC has had a habit of disappointing in terms of actually following through what had been agreed. So this will be one of the first indications we get as to whether it is happening.
Yeah, absolutely. And if it isn't, there's going to be trouble.
Right.
What else then? Am I missing something today, Richard? What should we be looking at today? So we've got Trump, we've got the after effects of the Theresa May speech, if you like. People still digesting what she said and how Brexit is going to be implemented. Also the ECB factor as well. So we know inflation is going up, but Mario Draghi is convinced that it's not time to move rates.
No, and that's, again, that kind of underlines the difficulty of having an economy in terms of monetary policy with so many members, because obviously the Germans, for example, are starting to get itchy feet now. Their economy is clearly strong enough to withstand interest rate rises, but it doesn't suit the rest of the Eurozone at this moment in time. So I think
that fair?
Well, it's the way it is, isn't it? The only thing that the German could do is something on the fiscal side, but at this point in an economy you would fully expect there to be interest rates going on, you know, to the benefit of savers, for example, and the Germans are certainly ready for it. But clearly, if inflation isn't there in the background yet to the sort of level that Draghi's looking for, then they are stuck with the other member states.
But that's the whole problem, isn't it? And that's when you get these seeds of discontent growing, and that could happen in Germany as a consequence of inflation.
Sure, and that's quite apart from the elections that are coming up as well later in the year, although Merkel seems to be remaining the favourite, let alone what might or might not happen in the likes of France and Netherlands, of course. So, yeah, politically this should be an interesting year globally, but in terms of today's focus and today's story, I don't think you can look too much further than Trump.
I think so. He's just dominating the agenda, isn't he? And we just hope that there won't be trouble on the streets, of course, as well. Sure. We hope that it'll be a nice, calm and safe day for everybody involved. Richard, thanks ever so much. Right, before I let you go, let's just have one last look at the equity markets. As you can see just there, it is early on, but it's looking very flat indeed today. I want to thank Richard Hunter right here, Head of Research at Wilson King Investment Management, for joining me for full analysis on the market open. And also thank you for your time as well. Goodbye.